having spent, when I joined Kevin about like 3 years in crypto, I started to realize that a lot of the projects that people were working on started to represent, like, maybe to a degree that I wasn't as interested in, like a lot of traditional companies or a lot of traditional like financial institutions. And so, I wanted to really just try and emphasize this community currency narrative and the fact that like people could actually build shared ecosystems, not just necessarily walled gardens.
Welcome to the CoinGecko podcast. For today's episode, we're very honored to have Scott Moore, co-founder and community lead at Gitcoin. My name is Bobby. I'm the co-founder and CEO at CoinGecko. If you're watching this on YouTube, we at CoinGecko really appreciate if you hit the subscribe button below. And yeah, let's jump into our podcast. Yeah, so a little bit of background about Scott. Scott is a co-founder and community lead at Gitcoin, a platform and DAO focused on building sustainable digital public goods. Scott also plays a supporting role in a variety of other organizations focused on this mission, including Kernel, Seed Club, UNICEF, Digital Public Goods Alliance, and Sustain OSS. To date, Gitcoin has distributed over $20 million to developers and creators around the world. Very happy to have you on the show, and welcome to the podcast, Scott.
Thanks. Great to be here.
Yeah, let's kickstart with an introduction, right? So, Scott, maybe can you give us an explanation of what Gitcoin is for the listeners who are not really familiar on what Gitcoin is actually about?
Yeah. So, well, kind of in your intro, right? Like, let's unpack what a digital public good is. And that's maybe the best place to start. So Gitcoin is aimed at trying to grow and sustain open source software first and foremost. And when we talk about digital public goods, we're principally talking about open source software. So the kinds of libraries, tools, overall sort of like code that everyone uses to run their applications, both in Web3 and in Web2. The goal of kind of framing these as digital public goods kind of goes back to almost this, state-like, nation-like concept of like the public or like a public space. And that has a whole history, which is too much to get into here, which goes back to like 17th, 18th century, like kind of like philosophy and like political science. But the overall understanding that people should have is that these are ultimately things that we all share, that we all rely on, like Uniswap or, Ethereum itself wouldn't exist if not for these kinds of public goods. And so what we're trying to do is create a series of experiments around how we build and fund these things. We started that with a bounties platform, which was like, funny enough, not the most novel idea. There's lots of bounty platforms in Web2. Lots of projects have tried this and failed. And I think the reason that we actually got traction partly comes down to the fact that Ethereum and this sort of like community currency layer adds those relevant incentives for people to actually bother getting involved, both on the project side and on the developer side. So that led to projects saying, well, if I can pay people my native token, I can actually get those people as members of my community too, and they'll become participants, not just speculators. And then similarly, you can get like, people who otherwise may not want to participate in traditional bounties saying, well, I'm getting, $500, $1,000 worth of tokens now, but I don't know what those will necessarily be worth in the future. If I believe in this project, then theoretically, like there's reason that, those might be worth more. Now, that's true for some tokens and not for others. Some tokens aren't aimed at having any economic value at all. And so that's obviously consideration. But the bounties product was really a starting point for us to kind of experiment with these ideas. That led us to Gitcoin grants. It led us to Kernel and other things that we can get into. But ultimately, those experiments have all been around this idea of open source software being the lifeblood of the ecosystem and how we can sustain that.
So I think you brought up a few different products in Gitcoin, right? You brought up the bounties, the kernel, a couple other things. Like, I guess from a layman's perspective, what are the differences between these products? So I kind of understand digital public goods, kind of like source code, like that is maintained by developers. I mean, so everyone uses them, but the developer have no way to monetize it. So you kind of like I suppose that's a grant you kind of pay to kind of support the developers. I guess the bounties on the other hand would be like, you would like some sort of a feature to be built. So you set aside a bounty, and that's kind of how you get started, like a $500 bounty to build a certain feature for a certain library use, I suppose. Is that kind of a good way to simplify things?
Yeah, exactly. So the goal of bounty is really like getting people involved in the ecosystem is difficult. It's hard to know where people can start. And one way that people can start is just with very granular, very targeted tasks. And those targeted tasks tend to be better because people don't need to have the context on like every single thing that the project has been working on over the last, maybe even, 5-10 years. And so bounties are really meant to be a starting point for someone to eventually either build up to become a core maintainer, sustaining the project alongside the team. We've had that happen actually quite a few times. Like people have actually been hired through the platform. Sushi actually has worked with a few people recently that they, were singing the praises of, who ended up going on to do a lot of really good work with them down the road. And then grants are really about like people creating their own projects. And those projects don't necessarily have to be infrastructure. Those projects can be on top of another ecosystem. So an example might be, on the infrastructure side, Wallet Connect is really core infrastructure. Rainbow, other wallets rely on that to work. But we also have projects like Uniswap, which created grants early on in their life cycle, and eventually, of course, ended up becoming sustainable sort of projects like maybe like I can say $1 billion projects at this point. And that was a huge win for the entire ecosystem. So like the fact that they started as a grantee and started, bootstrapping before they really had any kind of clear path to sustaining themselves through other capital is still perfectly valid. So people kind of like, start off with bounties. They get a sense of whatever they want to work on. And that hopefully leads them to creating new projects or other, relevant sort of initiatives for the ecosystem down the road.
And Scott, I'm interested to find out from you, right? I mean, there's so many ideas around in crypto, right? You can build like a DEX, you can build like, a lending protocol, anything. But like, of all the ideas in crypto, why do you end up choosing to build Gitcoin to fight for digital public good? Like, I'm just curious to know the why.
So it's a good question. Like, Kevin and I actually came at it from different perspectives, but like both shared this sort of like reverence for this history that open source software has had. And it goes back to really like both of us have had careers in the past where we've used open source software in our day-to-day work. I know personally, I wouldn't have been able to do any of the work that I previously, before crypto, worked with a lender doing sort of machine learning stuff. And all the libraries I used, every single like kind of tool I used was open source. And same with, Kevin also comes from actually probably a more robust engineering background and really just like has been using that his whole career. So that's part of it. But actually, like, it's a problem I've been thinking about in the context of DAOs for a while too. And the concept is basically, so in 2015-16, I worked on this idea called Venture Equity Exchange, which is a really weird like niche project, but it was actually funny enough, like kind of around the time like MakerDAO and like DigixDAO were doing some stuff around this too. And we were trying to do this sort of like equity swap, like kind of like collective funding sort of arrangement where founders could go and like basically create their own sort of founder collectives. And eventually the DAO hack happened. Obviously no one wanted to talk about DAOs for a while, but the overall idea of that like kind of was, if we create these kinds of shared goods, we can actually all sort of win together. And like, you get this sort of like positive sum multiplayer game that like we all talk about in crypto, accelerated to like the next level. So having spent, when I joined Kevin about like 3 years in crypto, I started to realize that a lot of the projects that people were working on started to represent like maybe to a degree that I wasn't as interested in, like a lot of traditional companies or a lot of traditional like financial institutions. And so, I wanted to really just try and emphasize this community currency narrative and the fact that like people could actually build shared ecosystems, not just necessarily walled gardens. And I think, I don't credit us with this. I think this was just a thing that happened on its own. But like, I think people have moved towards this direction now, especially in the recent cycle of thinking more about those positive sum multiplayer games and less about like walled gardens. And the reason this is really important is because if you look back to Web 2, standards were pretty much captured. Like the entire idea of like this sort of semantic web was captured by Facebook's like button. And then like that like button is just like all we have left of this idea of like this mutable, like kind of like ever-present interface for like community feedback across the web. And there's lots of examples of that where standards just fail. So having that kind of like shared belief and kind of like value set, I think is really important for us to actually make it to a point where we're really improving on Web 2, not just kind of like creating a new, but maybe like equally questionable system.
One of the things that I was looking at in Gitcoin was that you guys use this thing called the Quadratic Funding in with the matching grants that you collect from donors in distributing funds to projects. I think Vitalik came up with this paper for Quadratic Funding, and I guess I guess my question is, do you guys kind of draw inspiration from Vitalik Buterin, and maybe you can explain a little bit for us what is Quadratic Funding and why is it better than other sort of matching grants formulas?
Yeah, definitely. We actually started the platform obviously way before that paper was written, but the paper was a large inspiration for doing Gitcoin grants actually, and like that's partly why we end up talking a lot with Vitalik and like trying to get his feedback on what we're up to with Quadratic Funding, because I think he really understands the vision for that. Like, at least at the beginning, I think he understood the vision for that much better than we did. We just sort of saw the paper and we were like already building out this grants mechanism. The grants mechanism at the time, I think, was really just focused on like being a crowdfunding platform. There was no real like matching component. And we looked at the paper, we read through it, and we thought like, wait, this is like a bigger like deal than we think. And so the overall idea of Quadratic Funding, for folks that aren't familiar, is like, suppose it's effectively a more democratic way to distribute some pool of funds based on community sentiment or signal. And so suppose you have two grants, like Grant A and Grant B. Grant A raises $4 from 2 people. Grant B raises $8 from 8 people. The former would get a matching amount of about 20% of whatever matching pool is ready. It would raise $16. The latter would raise $64. 16 out of 80, 64 out of 80 is the 20%, 80%. And you would end up with effectively this matching pool distribution that's entirely based on the community's interests and what they care about. And that's good for 2 reasons. One is that now you're multiplying the money that matching partners put forward through the community's donation. So we often see like double the amount of, or even triple the amount of funding coming in terms of community donations versus what's in the matching pool. Although that's changing now that the matching pool is growing as more people are donating to it. And then 2, you actually get the community involved in the process. Like I think the problem with a lot of grants programs today, although I've seen in the last 6 to 12 months a lot of improvements on this, like a lot of grants programs are kind of opaque and they don't really allow the community to like have a say in what they're doing. I don't think that's necessarily bad in all cases, to be sure. Like I think there's cases where you need really strong expert opinions to make sure that you're actually delivering funds to things that are going to be useful. But I think there's also cases where you can end up shutting out the community in a way that like is unnecessary. And so having this balance, and actually this is how we work with a lot of the projects we work with, having your centralized grants program, but then also having this sort of like community grants program that you run in tandem is really like useful for like kind of balancing those two sort of like methods and goals. And so, we've been running that for actually the 10th round of Gitcoin grants is active right now till the end of the month. And we run them for 2-week periods. There needs to be a bound on the time just to make sure that we have like sentiment over a given kind of like snapshot period. And then we, have been running these with partly the goal of, obviously raising funding for the community. But one of the interesting second order effects of Vitalik's mechanism is that you have real identity anti-Sybil kind of like data that you're gathering, because in that example I gave, you could imagine that someone just tries to create 8 identities, split up their vote. It's the same dollar amount in both cases. They've just split up their votes. And now they've gamed the system through this sort of Sybil attack. And I think that eventually we want to get to a point where we actually have some level of kind of competence with this anti-Sybil research that we can export to other projects that need this sort of solution. And I think if we can solve that identity problem critically in a pseudo-anonymous way, we'll get to a really I think next level state for the ecosystem.
Yeah, I think you mentioned some interesting points there, right? I mean, just because a project gets more funding from same amount of funding from more people, it by definition will get a higher number of matching grants. So there is a lot of incentive to sort of manipulate the number of donors. So I'm not so sure if I remember when I was donating to Gitcoin, I was using Gitcoin the first time, many months ago. I was wondering, why on earth do I have to sign up and have my identity? I remember having to tie in my GitHub account, I think, and it was kind of annoying that. And I guess that was kind of the reason, I suppose, why you guys do that. So that because of the matching grant, I didn't really understand it back then, but it was kind of a bit annoyed back then. But I kind of see it. But even with those things, I mean, what are steps that you guys use to kind of prevent cyber attacks? What sort of verification do you use? Do you see this being effective? Do you see people sort of manipulating these things and try to create more accounts to sort of have larger matching grants for projects? It's interesting because these things that you talk about, if you find a solution for them, you could kind of see how projects can sort of, a lot of people are sort of manipulating these airdrops, right? Every account that has interacted with Uniswap once, every address will get a $400 uni airdrop. So if you're smart and you just farm these addresses, you get quite a lot of airdrops, I suppose. So, and that's what's happening now, right? Everyone is crypto. They know what's coming with the MetaMask, the Uniswap model. So they kind of farm all these addresses. But Gitcoin, I suppose, it's really hard to farm addresses. I think everyone only had one address or one account to kind of get GTC airdrop. But yeah, I'd like to hear from you, your point of view on what I just asked just now.
Yeah, just as a note, we don't think GitHub is the best long-term identity solution. It's just what we happen to start with. And to be honest, we have a lot of work we're doing to improve the number of options. To your question, some of those options right now are Web3 options. So for grants, people can verify their identity with Bright ID. They can verify their identity with even things like Idena, which candidly, the Ethereum community is not huge on. There's some even niche ones there that we've implemented that we just want to have there because we want a broad swath of options for people to try out and to experiment with. Because we don't even know which of those will be long term the best solutions. But the ultimate goal of having in that case 5-10 different verification options, POAP and ENS being examples as well, is to kind of eventually form this almost network of different identities, which have some of them are Web of Trust, some of them are Web 2 authentication based like GitHub. Some of them are entirely based we've thought about the idea of even implementing those sorts of Web 3 on-chain activity metrics the degen score, those sorts of things, figuring out how people are actually acting on chain. And ultimately all those different types of reputation have different almost fingerprints. And if we can combine them together, I think we can get a really strong picture of what someone's activity is without really knowing who they are, which I think is really important. Personally, I don't want to end up in a world where, everyone has their photo ID on the blockchain and that's what I just think that's going to be a world that, we'll come to regret in some way. And it worries me as a privacy advocate to some degree at a deeper level. But I think that the alternative, of having this kind of constellation of different options has been pretty successful so far. So we've done a lot of internal analysis alongside block science and others, and using these sort of metrics. Some of these come from just on data in the actual round itself. Some of these come from pairing that with the identity solutions data. But together we've done some analysis on collusion attacks and figured out sort of roughly what the kinds of collusion attacks we want to review in more detail look like. It might be that there are others we haven't caught. It's very possible there are more sophisticated attacks that we're missing, but we do know that there's a reasonably probably about like, there's a 5% tax, probably approximately, in terms of collusion on the platform right now. And that 5% tax, we have like good solutions in place for, and we're actually working with the community to ratify like implementing those solutions. We don't want to be the only ones, of course, to decide these things unilaterally. That's part of like the goal of GTC and like this governance platform and kind of ecosystem we created. But ultimately, we think that's, you know, a really important experiment, not just for us, but for the broader ecosystem, because again, other people being able to use these tools will be, I think, critical for us to get to the next stage of development.
The CoinGecko podcast is sponsored by eToro. Here's a short blurb about the services that eToro provide.
Meet Chris and Mark. They've both heard of Bitcoin and Ethereum. But while Chris is using eToro to trade top cryptocurrencies, Mark keeps getting cold feet. Chris uses eToro's simple and intuitive platform to build his own crypto portfolio. And Mark is still waiting for a sign. Chris follows and connects with other experienced traders on eToro. Mark is following the advice of Eugene, a friend who prefers to keep his money where he can see it. Chris uses eToro's copy trader to automatically replicate the portfolios of leading traders in real time, while Mark is still searching for answers. Do you feel like a Mark? Join eToro and gain the confidence you need to trade crypto. eToro. Sign up for free.
With regards to the matching funding and all, like, can any project just kind of get onto Gitcoin and be involved with and get like matching funds, or can they just easily register without, or is there an application process to receive some of these matching grants?
Technically, yes. Technically, anyone can be involved, but we've actually implemented a community review process for grants. And the reason for that is actually, funny enough, after the round, I think it was round 8, Maskbook donation back to their community, which was like really good to see. What happened effectively was Maskbook airdropped people who had donated to Gitcoin grants a certain amount of their token when they launched, and just sort of as a thank you for donating. And ultimately what that resulted in was a lot of people in the next round spamming contributions, trying to like see if they might get into like another airdrop. So we've started thinking about like, you know, how do we make those kinds of improvements? But, you know, we've, as a result of that, also seen a lot of people kind of like randomly putting up new grants and trying to spam like grant creation in hopes that, you know, creating a grant will also somehow impact this. Mm-hmm. So we have implemented a community review process, which is really just to detect like things that are obviously fraudulent. Like, I'm Uniswap, I want to put up a grant. Like, no, you're not. You're clearly not Uniswap. And like similarly, we've tried to really just like remove things that are clearly like, you know, it's just random strings. It's like it has no. It's not even like sensible like what it is. But aside from that, we haven't really done much, you know, curation of grantees, and that's intentional. Like, for Vitalik's mechanism to work, it needs to be credibly neutral. That's something that we've entrusted the community to decide as well. And so the community might start putting in parameters that restrict things a bit further, which I would be really interested to see. We're trying to, like, as much as we can, stay out of that. But for example, one of the stewards are kind of like the folks who, when we did the sort of like token launch, were delegated sort of responsibility. That was all based on the way that we did like the actual like launch. Everyone who wanted to claim tokens had to delegate to one of, I think there were about 50 stewards up at the time. And it was an open process. Like, anyone could post on the forum, and still can post on the forum to become a steward, to have their name added to that list, by the way, if anyone's interested that's listening. But the overall goal, just like of you know this proposal, was one of the stewards realized VC funding was not really, you know, potentially relevant for a grants program. Like, if you have a lot of VC funding, why do you need a grant? Was a question. And we've had a lot of debate on the forum about it. Actually, some people are saying, well, you know, how do we measure what too much VC funding is? How do we measure whether or not someone has actually taken in VC funding? And like, I actually, have no strong opinion on this. I can't have a strong opinion on it. It's really up to the community to decide what they want to do with this vote. But like, I think that's one really interesting question. And I think there'll be more questions like that. Like, as the community starts to determine these new parameters, there probably will be more restrictions on what kind of grants can be created. But I don't think, any kind of core public good, like a wallet connect or like an Ethers.js, really has to be too worried about that.
Yeah, I mean, was there a conclusion from the debate? Because I mean, I remember using Gitcoin, trying to find some projects, interesting projects to give some donation over in the past couple of months. And I saw some projects that have a token trading in the markets. And I was wondering, if you guys have a token, why do you need to get a grant from the community? Doesn't make much sense to me. And then some of these projects, especially the most annoying one to me was projects with tokens. Like that was kind of a big kind of a red line for me, I suppose. I don't think projects with tokens should be asking for grants. But I mean, was there a conclusion from the discussion in the forums,
So I think that hasn't quite yet gone to vote, but I would expect, like, it looks like generally from the thread, and other people can verify this, like that people are leaning towards removing that sort of grant category. And there's been other grantees that have been in this, as you mentioned, like that have tokens, that have like a large community that have been in this situation. The good news is, quadratic funding only works as well as someone's interest in donating. Like, if a project is up there and clearly doesn't really deserve funding, usually, for the most part, we haven't seen a lot of projects that have, if they're really, really like clearly not in need of the funds, we haven't seen them receive a lot of the matching pool. There has been one exception to this, which was Maskbook. But actually projects like Maskbook, like, and the good news is they actually sunset their grant. They realized, wait, we're getting a ton of matching funding. That wasn't our intention in this next round after the airdrop. And they sunset their grant. They removed it from the matching pool as a result of that. And so even in those cases, I guess like the good news is we're seeing like some amount of like self-restraint and like self-policing.
Yep.
But again, like, as the community starts to take over more of these roles, credible neutrality becomes sort of like contextual in sort of like, we have our own public, which is representing the Ethereum community, which is the stewards, which is this pool of delegates. And like that pool can be credibly neutral within their own norms and sort of like cultural values about what kind of grants are part of the pool. So we couldn't really remove anything, but we believe the community has a lot more authority to do that.
A couple of weeks ago, you guys launched the Gitcoin GTC token. Congratulations on that. Airdrop to anyone who's contributed to Gitcoin grants in the past, and I'm one of the recipients of the airdrop, so very happy for that. I'm just curious though, like, I mean, it's kind of surprising to receive the token as well. So what's kind of the reasoning behind releasing this GTC token? Would be, I think I saw one, I mean, you mentioned it a few times a little bit about the voter delegation, the stewards that you talk about. And then is this kind of like this stewards and all that you talk about, is it a bit similar to the representative democracy that the US has at this point in time? So it's curious to hear from your point of view on Gitcoin, the token DAO and so on.
The token itself was really meant to be a governance token first and foremost, which is really critical to note. Like, the token itself for now has no real economic rights. We don't intend for it to have any economic rights, all that kind of stuff. Like, I think one thing that's really important that we did get a lot of questions about was, when can I buy this token, or things like that. And like, there's no intention for that to be part of GTC. And the way it was airdropped was actually very intentionally around donating back to people who had previously provided, some kind of value to the ecosystem. So either they had, done a bounty or funded a bounty, they had created a grant or funded a grant. They had been part of the kernel, which is the incubator program that we sort of like run alongside, folks like Andy Tudhope and others in the community who act as mentors. And together with all those sorts of, results, all those sorts of like actions, we were able to like get a pool of stewards and sort of like basically delegates that represent the values of the community that have actually been participating in the community for a long time. And so having those people govern the community just seemed like a really strong opportunity to us. Like those people can actually make decisions that we can't make in an incredibly neutral way. Like, for example, one other problem in addition to the anti-Sybil stuff, or in addition to who gets to put up a grant in the first place, is grant discoverability. So we have, ability to order grants in the platform. And the grants are ordered according to how much matching funding they received. They're ordered in terms of how many contributors they've had this round so far. All of those sorts of ways of, objectively ordering grants doesn't really take into account the actual like interest the community has in those grants through, or the expert opinions, like the sort of like relevant insights the community might have into those grants. So an example might be, we have this concept of collections, and like Danny Ryan creating the E2 collection would be like, to me, much more valuable than me creating an E2 collection. I don't know nearly as much, obviously, as Danny Ryan about E2. And there's lots of examples like that where we want the community to figure out better discovery mechanisms, where the community has more say in the kinds of things that they want to see surfaced. That extends to the idea of categories. So like we have the infrastructure category, we have the community category, we have the like application level category. All these categories are just like randomly defined by us. We have not like given really any, there's no reason that these should be the categories, essentially, aside from the fact that we just said that these are categories. So ultimately, figuring out that discoverability problem in a more community-centric way is a big part of it. Mm-hmm. And then the other part of it is like, we don't want to be, I keep using the word platform. We don't want to be a platform forever. We eventually want this to be a public good sort of protocol. And the reason for that is partly related to the identity conversation earlier. Like all of these sorts of ideas around identity can be used to better sort of understand and fund public goods together. And all of those things can be wrapped into almost like, data set and like set of sort of like, potential, like anyone who wants to create a CLR project or wants to create a public goods funding project in the future can leverage everything we've been doing, hopefully, to make their project better. And whether that's the identity sort of solutions, or whether that's like the data from previous rounds for collusion detection, whether that's, just getting a sense from our community as to what the Ethereum community believes is a public good in the first place, all of those are open questions that like we want to propagate to the ecosystem at large. So that's sort of like a long answer, but yeah, there's a few components. There's sort of like, obviously short-term governance over these like key decisions around grants and, what is a public good. And then there's these longer term decisions as well around exporting this to the ecosystem. Sorry.
Interesting that you brought up about, how you think about Gitcoin as not really a platform, but more of a public good. So which brings up some interesting question, right? How do you guys fund your operations, right? So when you got started, do you guys raise a round from VCs, or do you kind of bootstrap it? And then kind of, I know there is like every grant that you make, there's like a line item at the bottom where you can kind of pay, I think 10% or 20% to Gitcoin to kind of fund operations. But now that you guys have a token, is there sort of a treasury, and you guys, you can always turn on the taps, I suppose, so to say, like percentage of the grant, the donation goes to the treasury, for example, and then that funds operations. But it'll be interesting to hear how you think about the funding and the long-term operation needs. The funding needs for Gitcoin.
Definitely, and this is something I haven't really talked about too much in terms of like my own personal vision. Again, all of this is just like my opinions, and I don't want to speak for the community. Like we don't want to, like that's the ultimate goal here, is that like we don't have a say in this sort of decision making. But one of the things that I think is missing from the community is almost a DAO of DAOs, if that makes sense. And like it sounds very nebulous, but like
for DAO.
we have a lot of different kind of like public goods DAOs that are spinning up, and tools for like infrastructure for DAOs that are spinning up. So like Moloch DAO, Moloch V3 is an example of this. Now DAO is an example of this. Obviously, going back to Wallet Connect, Eaters.js, those are examples of core infrastructure that we need. But like the overall like DAO's narrative should be broader than that. So Kernel, for example, is our incubator, but like Kernel is also in, some ways philosophically a DAO. It's a DAO in the sense that people are coming together in these cohorts, 200 people or so per cohort, and they're learning together, they're sharing knowledge together, they're building companies together, and then they're going out into the world. Seed Club, very similarly, is sort of a DAO and is focused on like a very similar sort of like mission of how do we empower creators? How do we get them to build their own companies, their own projects? And then you've got like things like curator DAOs, like Pleaser DAO. You've got like all these sorts of like different models spinning up, investor DAOs, like through like Syndicate DAO. And all these different models, I think, ultimately rely on some set of shared public goods. And so one of the things that I'm very interested in is how do we start to fund that infrastructure? And like, to your point, how do we fund that? Like the treasury that was, started to be generated from, the multi-sig of matching funders, the VC funding that we do unfortunately have like the history of, can go towards that rather than go towards us as a company. And then eventually, right now we just have governance rights. There's no real like value to the token treasury, but we do want to reward people with governance for participating in the ecosystem. And so from my perspective, there is, sort of three layers to this. There's the existing donations from the community. There's VC funding flowing from us, the organization, back to the community, rather than us like holding that in like sort of like a cave somewhere and just like pretending that that's just only the company's money. It's the ecosystem's money. And then three, kind of like these governance rights, which over time, are going to provide ways for the ecosystem to decide what, even a token swap sort of arrangement looks like, or other sorts of arrangements look like. Even if the token has no economic value, there's companies and projects that want to be involved in the sort of like building of public goods. Radical is an example of this, that is also very mission aligned. And ultimately, those are swaps that, because their tokens do have value, could end up having a positive impact. So, there's a lot of open questions around like, how do we sustain this long term? And partly it's an open question, like all these are open questions, because we're really early. Like this only launched about 2.5, 3 weeks ago. And so, we still have to figure out a lot ourselves. But ultimately, that sort of DAO method of like potentially, going back to the venture equity exchange thing, like being able to create these founder collectives to me would be really exciting. Like that's what I would love to see with this DAO's narrative. And if we can fund the shared infrastructure around that particular niche, in addition to obviously the broader mission, personally for me, that's a really interesting area. So I know that's like a not complete answer, like because we don't have complete information. I think yet on where things will go.
Figure it out as you go along, right?
But like that's the from my perspective, one of the really exciting like possibilities.
Cool. I guess one of the last questions that I have for you today on the podcast would be, you guys had a phenomenal first half of the year, many matching grants, many projects, your token launch. But what can we expect from Gitcoin in the second half of the year?
So I think the biggest thing for me is to really hone in on how we run rounds and run basically Gitcoin grants through the community. My view is that we've so far done a good job of like the community ratified grants round 10. They dealt with this whole Akita dog token situation, which is a lot to like dive into. But in short, Vitalik gifted something like, I think at spot price, it was originally like $500 million of dog tokens to the community multi-sig. That obviously, like, the liquidity is not that high on those tokens. And so, but, he donated a bunch of sheep to the COVID-19 initiative in India. He donated to a lot of life extension causes. And then the Akita tokens were what we ended up getting. And it ended up causing actually like a lot of really interesting, like game theoretic, like kind of DAO between like inter-DAO, like sort of like politics. Because our community is very public goods focused, and we want to see like how these funds can be used for like public infrastructure. the Akita community originally, we thought, or at least the community stewards tended to like sort of like, vote this way. They thought the Akita community was like mostly just a like pump and dump sort of thing. They didn't think it was like very valuable. And we eventually, through a lot of conversation and kind of like, shared, sort of understanding, realized that like we actually care about some of the same things in terms of just like finding ways to, basically sustain public goods together. That there's a long history of like, anyway, like they ended up, the community voted to sell all the tokens. The community for the Akita folks in turn told their community to sell all the tokens. And it created this prisoner's dilemma where we were in a defect sort of state. So we moved back to a cooperate sort of state. And now part of the funds are going towards an Akita ecosystem fund. Part of them are going towards the Gitcoin grants multi-sig, and part of them are going towards a charity, which will be determined jointly between both organizations. And so the reason I say we kind of came to this agreement that like public goods are important is because that ecosystem fund they're creating ostensibly will be used for actually building core infrastructure that supports things like their ecosystems, needs and like the Dogecoin, sort of like that whole like ecosystems needs. And there could actually be some interesting bridge technology that comes from that. Similar like sort of ideas have been discussed. But what was super interesting about these decisions, like the Grants Round 10 decision and the Akita decision, is that the community actually kind of self-defined a process, and they figured out how to vote, and they actually went forward with those votes in a relatively like streamlined, sort of like, I think relatively prompt fashion. And like that whole process was very high engagement. It was like 80 to 90% turnout. And that's really like optimistic for me, because there are a lot of DAOs where there's not turnout, where people aren't voting, where the people that are voting are kind of just shareholders in the company. And all the people that are voting, all the people that are participating in this process for us are just people who were using the platform, who were part of the community from the start. And so that, kind of, I guess to answer your question, like that sort of is my eventual hope for what we're doing in Q3, Q4, is that the community will continue to sort of like iterate on these ideas, how they can improve their process, and then like how they can improve the kinds of, the level of proposal that they're voting on. Because, the Akita proposal was actually probably a higher level of difficulty than we were expecting for almost this tutorial island of the DAO. We thought, okay, Grants Round 10 will probably be the first thing that they ratify. It'll be really like, it won't be that like challenging to do, right? Because people will generally agree on that idea. But now I think we have like, a much broader scope. Like I would love to see more votes happen around like not just grants ratification, but like, what would maybe like one example would be, what would an entirely new interface look like for Gitcoin grants? Or what would it look like for a joint round between CLR Fund and Gitcoin? What would it look like to integrate things like radical identity or like radical like authentication into Gitcoin and our ecosystem? What would it look like to run a Uniswap specific round, like only for the Uniswap ecosystem? Those sorts of things are really interesting to me because they're like harder questions. Like I don't know the answer to those questions.
Yep. And
they're things that we will eventually need to figure out if the goal of this is to collaboratively like fund public goods with the rest of the ecosystem. And, it's been a long road. We have historically, I didn't talk about this too much, but like we started in consensus. That was like where Gitcoin got its start, got its initial funding. And now we're an independent thing. But like we've slowly been able to have more and more freedom around how we sort of act in the community. And I've been, really heartened just to like see that process unfold. And like now we're really at that point where it feels like anything is possible. So that's a long answer, but hopefully that helps.
Yeah, I think that sums up very nicely for the podcast that we have today. I think Vitalik, gave you guys a tough time by giving you all the Akita tokens. Like I definitely would not want to be in that situation, having to deal with that, how to distribute the grants, and you have angry dog token owners coming to you. But I think you guys, I'm very happy to hear that you guys found a good solution to that, the donation from Vitalik. And I think that will probably take up a lot of your time in Q3, Q4, and your summary up there just now was perfect. So Thank you very much, Scott, for spending the past hour with us on explaining what Gitcoin is and some of the things that you've done, the reason why you're doing it, and we're happy to have you on the CoinGecko podcast.
Thanks so much, Bobby.
Here's a short blurb about the services that eToro provide.
Meet Chris and Mark. They've both heard of Bitcoin and Ethereum. But while Chris is using eToro to trade top cryptocurrencies, Mark keeps getting cold feet. Chris uses eToro's simple and intuitive platform to build his own crypto portfolio. And Mark is still waiting for a sign. Chris follows and connects with other experienced traders on eToro. Mark is following the advice of Eugene, a friend who prefers to keep his money where he can see it. Chris uses eToro's copy trader to automatically replicate the portfolios of leading traders in real time, while Mark is still searching for answers. Do you feel like a Mark? Join eToro and gain the confidence you need to trade crypto. eToro. Sign up for free.
This podcast is provided as part of the overall information on cryptocurrency contained on our website, is for your general information only, and does not howsoever constitute any endorsement, financial or investment advice, nor any solicitation or offer of securities or other financial instruments. CoinGecko and the podcast presenter makes no warranties, implied or express, of any kind in relation to this podcast, including, without limitation, the accuracy and updatedness of its content. All opinions and recommendations there in the podcast are based on the personal opinion of the presenter. Please conduct your own research and procure professional advice should you, at your own risk, decide to howsoever invest or trade in relation to the content contained in the podcast.
For the latest crypto prices, visit our website. If you haven't already, make sure to subscribe to our YouTube channel to keep up to date on the latest crypto trends.